So the trial balance question and updating the trial balance question really. So this is the last chapter that we have available to ourselves. Key points in this chapter. In the exam, you're going to create, or you're going to complete, or you're going to update a trial balance from an extract from the general ledger. So this is a repeat of the trial balance question in the Introduction to Bookkeeping unit. So you will have done that in the Introduction to Bookkeeping unit. But within this one, you've got some potential to update it for errors and reconciliations. And so important thing is going to be here is because the errors can go either direction. So people who pass this in the Introduction to Bookkeeping using DeadClick won't be able to do that here because they're going to have errors flipping the figures backwards and forwards, and also we're going to have VAT switching between amounts owed and amounts due, and similarly bank accounts switching between overdrafts and bank balances. So that's going to be deliberate in this one to try and sort of prevent and finish that lot off really. And we'll have some reconciliations as well that might mean that we might update our trial balance as well. We're going to be using a lot of T accounts in this, and remember we're going to balance off our T accounts so that we can we can check that they add up correctly. That's what the balancing off of the T accounts does. And if the shareholder reserves is missing from the list of balances in there, when we're creating the opening balance or we're updating our things, then remember the shareholder capital is the difference between the debits and credits. Assets equals liabilities plus capital. So if the shareholder capital is missing, it's the difference between the debits and credits. So that's what we're going to key points. So first of all, let's just look at sort of T accounts and balancing off our T accounts. So we've got our T accounts here, positive money going in the debit side, and so that's plus money to the organization. So an increase in asset or a reduction in liability plus money, debit, and negative money to the company. So an increase in liability or a reduction in asset going on the credit side. Our carry down figures are just a balancing figure to make sure that the two amounts balances. So we put this carry down figure in there, balancing figure. It's not money moving into the accounts, it's just simply an additional thing. We make sure that we do this balance, so we put this figure in, add them both together, check that they're the same, and then that is then the balance of the account. The brought down balance is the balance in the account, really. That's the proper balance for the trial balance figure there though. This is what the examiner is going to say is the balance at the end of the month and the period in there at that particular date. It's not a balance, it's a balancing figure, but it's what the examiner says. Just roll with it. The real balance for the trial balance is the brought down balance on the following period. That actually is the balance in the account. And if we were in the real world, that would be the balance in the account. And if we were in the real world and we were using a digital account system like we would be doing, that would always be the balance in the account. This carry down figure would never even exist. So we got that. We're using our T accounts, and you see you're going to have to use this kind of approach because you're going to have to use T accounts because you're going to give the opening balance. Then I'm going to put something in like, let's say, an irrecoverable debt or whatever. You have to put the T accounts in, put your post journals to those T accounts, and then what is the updated trial balance? So that's what we're going to see as our question really quite often really. So in the book, I put a bit of an update on that, but realistically, chapters 1 to 6 of the Introduction to Bookkeeping book. If you're light on your double entry bookkeeping, go on and use that kind of approach there. It's way better than the way in which it's sort of set out in the AAT portal as well. So then we get our trial balance in here. Remember, if this is missing down here, so if we don't have our shareholder capital entered in there, it's not a zero. You've got to work out what the difference is between the debits and the credits, and then it's the difference between the debits and credits. Remember, this is that there's amounts owing to the shareholders. If it was on the other side, because we'd made losses, this would be the amounts the shareholders owe us as the company. Whether they pay out or not, the limitations liability is questionable. We're then going to update our trial balance. So in the exam, you're probably going to be given a list of amounts that are going to be converted into a trial balance. So you're going to check first of all in that, given the starting trial balance, just be mindful to just check the idea of whether the bank account is a bank account amount owed from the bank to the company, or whether it's an overdraft, which means that we owe the bank something. And the HMRC one as well, on the VAT, probably is going to be an amount owing to or an amount owing from HMRC. Remember, we could have HMRC could owe us some VAT if we're starting up the business and we've made lots and lots of purchases. So that's always something where the examiner is going to try and sort of put those two, the different to what you'd normally see them, to try and trick the dead clickers really. If you're you might not be given the shareholders funds, so any kind of assets minus liabilities are going to be that missing share capital figure in there. And when you're sort of doing, when you're sort of given that sort of journals and you're going to post them updated, use your T accounts. You've got the time in the accounts to use in the exam to use T accounts there. Balance off your accounts. Then you've got the balances to go back into the trial balance there, and so why mess about, and not check your work properly to just finish the exam sort of 5 minutes early. Just remember in here, in terms of check your work, this carried down balance here and then retotaling it so they are the same, that is what check your work means. It does not mean redo the question twice. It means do the carried down balance, retotal the figures, the brought down balance, that goes into the trial balance, and that is how you check your work properly in this exam really. Remember as well, it's the brought down balances that the balance for the trial balance, not the carry down balance. Carry down balance is not really a balance, it's just a balancing figure. The examiner calls it a balance. It's not a balance, it's a balancing figure, and that's just that. But you'll have to roll with it in the exam. Okay, then you enter the updated account balances and everything's good. You retotal your trial balance, make sure that it balances, and that's the end of it really. So that's it. We've finished all of our playlist and we've finished our books, and hopefully you got the book as well. So you've now got a good strategy for answering the questions. Remember, the way to answer each question is exactly the same regardless of how the examiner changes the wordings around. So whatever the answer for, do the full control first, get all of the answers that are possibly available, and then only then answer the question and drop your figures back in. So that's the key thing that you're going to have to do in this unit. And also good double entry bookkeeping really from the ITBK book. If you're struggling with, you have insufficient knowledge of double entry bookkeeping, your ledgers, the postings up from your ledgers, you're posting from the day books into the ledgers as well, and use the ITBK book that I've provided really. Checking it out with students, I think the key things that we're sort of seeing is where the traditional books, the traditional books only achieve 70% score pass rate for this unit. It's not great really. And that's including the people who resit as well. So perhaps it's only about 60% pass rate of people actually take the exam first time in this unit. Which isn't great. Looking at it, it does look like they take their lead from a lot of the stuff that comes in the AAT portal, in particular using assets minus liabilities is equals to capital, and that really sets up a very bad position for this unit in terms of T accounts. Use my ITBK book and the playlist that goes along with it, and that will make your double entry bookkeeping far better for this unit, and it's specifically written to be able to underpin this unit and the business environment one, which we'll see next, which is even a little bit harder than this one really. And don't be tricked into changing from the plan. You've got now a strategy for every single question. You see wages control, you know how to do the wages control one. You see a bank reconciliation one, you know how to do the bank reconciliation question. You see a difference between the purchase ledger and the purchase ledger control account and the purchase ledger, you know how to do that one as well. You've got steps to do those ones. Do not change from the plan. Follow the plan, then answer the question. Now what it will mean is that you're going to produce twice the number of numbers than the examiner is theoretically asking you for, but you would have had to produce those anyway in order to be able to be right, and you'll have the full reconciliation, you'll come out of the exam, you'll know you pass. Hopefully, this is the one unit as well where you can quite confidently go in and feel that you should get high 90s in it, even though, as I said, there's a very low pass rate, and I'd feel, as you see in the walkthroughs, I knock out 100% every single time. I should do. I'm a professional accountant. So at this point, then you should have and understand everything that's covered for this unit. Really. I've produced some walkthroughs of the AAT practice assessments, for you. So that's in the playlist to go through. So make sure you go through those ones and see exactly how I go about and approach those questions, so you can copy it. You've had through the book as well, probably like sort of you've got two assessments worth of questions within each within the chapter, and now I sort of provide a sort of a free assessment at the end of this the book that accompanies this playlist. So you'll do that. You got a couple of AAT ones online as well. I think there's a Mazars one's knocking about online as well for free. They've got one which is quite similar to the AAT assessment, and practice practice is the key point about this thing there. So keep practicing and practicing and practicing. So also as well, if you still feel that you need more practice, well, there's 5 assessments in another book that's available on Amazon. It'll be coming out soon once I've finished it. I usually go through these playlists first, and then I sort of do the questions that go alongside it. If you enjoy this, and if you bought the book as well, it would be really helpful if you left a review. If you didn't buy the book, don't worry about it. Just leave some nice comment or whatever in the playlist. That'll be nice as well. Hopefully it was helpful. Good luck with the exam. Hope you do really well. Put in the comments, how well you got on. What did you score? I'd love to know. Thanks a lot. See you on the next one. Bye bye.